Welcome to Inside the Deal. I'm Suzanne Stevens. My guest today is Jeff Bistrong. Jeff is a managing director with the middle market M&A advisory firm Harris Williams & Company. Jeff, we're here to talk about how an Obama administration might affect mergers and acquisitions, M&A activity going forward. And one of the things we've heard Senator Obama talk about on the campaign trail was closing loopholes for corporations, which would in effect increase the amount of taxes that corporations pay. Would that be to an amount that it might affect M&A activity?
Right. Well, I think closing the loopholes is one of the many lofty objectives of the new administration, but that combined with increased taxes, both at the corporate and income level side, increased fears of protectionist activity, as well as increased regulation, antitrust and otherwise, I think all those will combine to have a negative impact on M&A deal flow, particularly among large corporates, so we'll get more scrutiny.
So it'll be the larger corporations that we might see a decline in M&A activity based on some of these measures.
Absolutely. It's our expectation that there'll be fewer larger transformative acquisitions and that the large corporates will really pull back and maybe focus more on smaller middle market size deals.
Okay, because those are because corporations have to do deals often to grow. I mean, it's part of their strategy. So you think we'll see some of that energy going into the middle market? In
a down cycle, it makes sense to be acquisitive if you can, and they're really looking for digestible size acquisitions that they can fund. Let's face it, the liquidity crisis had a negative impact on their ability to borrow, and so they can do these smaller middle market deals.
I want to talk specifically about some industries, and something else we heard Senator Obama talk a lot about is energy independence. That will presumably mean some investment, tax credits, whatever, within the alternative, the green energy business. Do you think we'll see increased deal activity as a result?
Well, again, I think this is a very good objective on the part of the new administration. But in and of itself, is it going to fundamentally change activity here? Maybe, maybe not. I mean, the truth is increased energy prices are motivating entrepreneurial parties to invest in new companies. And I think anything that the administration does will be a positive, but my question would be, how quickly does that have an impact on the market? It's probably an intermediate or longer term effect.
And what to you is intermediate or longer term?
Well, I think the first couple of years of this administration, what's first going to be dealt with is the liquidity crisis. I think that far and away is the biggest issue in front of this administration or either administration that would have prevailed in the election, and that's really what's going to color economic policy for the short term, certainly for the next year or year and a half.
We could see some big changes in healthcare as well under an Obama administration in the longer term. Could that affect deal making in that industry?
Right. I think government-led innovation is always difficult. I think providing incentives in that sector is very attractive, but a lot of interesting deals are getting done in that space anyway. So we just sold health media to Johnson & Johnson, which is an innovative software as a service solution for behavioral health. And I think we'll continue to see that type of investment, but certainly government support will have a marginally positive impact.
What about private equity? They have been sidelined to a degree, focusing more on their portfolio companies because of the liquidity crisis. What effect, if any, would an Obama administration have on private equity getting back in the game?
Well, yeah, I think that if you look at the Obama administration, there was a negative bent maybe on private equity, certainly in the pre-election rhetoric. On the other hand, private equity groups have a lot of equity capital. They're continuing to invest. We closed a deal in the last week for Vista Equity Partners, which acquired a vertical software company, Aderant, in the legal space. And we actually have fairly, I won't say robust, but healthy deal flow with the private equity groups. Now, those deals are getting done on a lower leverage basis, but they will be impacted by increased taxes, particularly on the capital gain side. So I think that the new administration's platform will have a marginally negative impact on private equity, but certainly not put them out of business.
What about technology? That's an area that you specialize in. We have seen decent M&A activity among smaller tech companies. Do you expect that to continue, or any changes based on the Obama administration?
Well, I think if the press is generally saying, hey, technology is still somewhat risky, and that may be true in the larger corporate side where we're starting to see some tailing back, but there's a lot of innovation happening in the middle market. A lot of the technology companies out there are really focusing on ways to drive efficiency, and we expect that to be a bright spot. And it touches on two of the other sectors you talked about. Healthcare and energy and power, when combined with technology solutions, that's where we expect to see continued robust activity.
The liquidity crisis, as you said, is going to dominate the early months, years, possibly, of the Obama administration. When might he and his team actually be able to really look at implementing their economic agenda?
Right. I think he's going to have to proceed cautiously. I think there's neither of the two potential candidates had any particular wisdom in terms of how they're going to address the liquidity crisis. I think that's work in process. But I think clearly the new administration should be wise to slowly implement anything that would increase the friction, whether it's in the form of taxes or regulation in an economy that's obviously slowed and will remain slow for some time.
Are you encouraged, discouraged, positive, negative on an Obama administration and how it's going to affect deal making going forward?
Well, I think as I led with, I think there are a lot of lofty goals put forward by the Obama administration, and I think those may have longer term positive impacts for the economy. I think they will present challenges if he implements his platform, certainly in the short or intermediate term, particularly in face of the liquidity crisis we're in now.
Jeff Bistrong with Harris Williams & Company, thanks for coming in.
Thank you.
I'm Suzanne Stevens, and thanks for watching Inside the Deal.